I'm Charlotte McLeod with the Investing News Network, and here today with me is Chris Marchese, Chief Mining Analyst at GoldSeek, which is celebrating its 25th anniversary in about 2 weeks. Thanks so much for being here, Chris.
My pleasure.
Great. So let's jump right into our questions. We recently saw gold break 1,800 per ounce, so that seems to me like a natural place to start. Can you tell me your thoughts on the path forward for gold as we continue into 2020?
Yes, I mean, we have the perfect storm to send both gold and silver higher. I think silver will start to outperform later in the year. As you know, the gold to silver ratio is very high. I mean, I think it's still around 95 or so. And while I don't think it'll get back to levels that has averaged over the past 3 decades, 45, 50 to 1 on a constant basis. I think it will fall to 60 to 1. And, at the height of the bull market, maybe go to 30 to 40 to 1. 2011, we saw it, I think, hit 34 to 1. Anyway, for gold, this is, it closed above 18, or I don't know if it closed today above 18. But it's flirting with 18. I don't know if it's going to hold it right away. It might take a couple weeks of consolidation. I kind of want to see some consolidation. It's pretty much been straight up for gold and the mining stocks especially. It was encouraging once gold passed, 1770, the junior stocks really started to rocket higher, which is a good thing because before that we saw the royalty companies, senior, mid-tier producers, and select junior producers really move, but not the junior mining stocks. So, I think second half of 2020 is going to be great. There's a lot of catalysts, which is good for the precious metals, bad for mankind. A lot more money printing. Let's see who wins the election. I don't think it'll be Trump. I think gold will move significantly higher on that news, but we'll see.
Yeah, maybe you can fill us in a little bit more on some of those upcoming catalysts. Interestingly, it's an election year, which you mentioned, but I really don't hear a lot of people mentioning the election, even though I think in a normal time, that would very much be something we'd be talking about.
Yeah, so some catalysts first are, there's going to be more money printing, increase the asset purchases. Everything's still shut down. I'm in California. It's supposed to be reopened, but there's hardly anything reopened. And this is going to take a big toll on the economy. The government and the Fed is kind of painting it out to be like, oh, there's going to be a V-shaped recovery and all that. No, I don't think so. That's never going to happen. It's going to take years. And it wasn't because of COVID. It was because of what has been going on in the financial system the last decade plus and the policy response to COVID. So I think there's going to be a lot more reckless monetary policy, fiscal policy, like they did earlier on. It's basically helicopter money, giving people money to stay home, basically disincentivizing going back to work and if you make under 70,000 a year. So they'll probably renew that program. So it's just a mess, and this isn't working. It's not going to work. It's, the last few decades we've been inflating one bubble after the next. That's why we've seen the gold price go from 300 to where it is now, and it's poised to go a lot higher. And you don't hear as much about the the election a lot, I think, because a lot of the Black Lives Matter issues that's been overtaking the news, and the fact that his opposition, can't remember his name half the time, and he's done a horrible job. We have record deficit spending. We're the biggest debtor nation in the history of the world. And either no matter who wins, it's going to go higher. I just think a Biden win would push it higher faster.
Okay, I want to take you back to the gold stocks, which you mentioned a little bit at the beginning of this conversation. Where do you see the most opportunity there? You were talking about how the juniors have gone pretty much straight up in the last little while as gold's been rising.
Yeah, so hopefully we get some consolidation. I mean, it wouldn't be uncommon to see a 15, 25% sell off in the mining equities as they have gone straight up. Hopefully that'll create some opportunities, but that might not happen until we're, 20% higher from here. So, I mean, that's hard to tell, but I mean, you want to be exposed right now, even if you have to pay up a little bit and it retreats in the near term. The risk, I believe, is tilted very much on the upside, not the downside. I would expect if gold retreated, 1750, 1770, 1780. So I don't think it would be that harsh. And I think gold presents a really attractive, or silver presents a really attractive opportunity in the miners and the metal itself.
Yeah, I know you have a strong background in silver as well, so I definitely want to talk about that. I know some investors have maybe been a little bit disappointed this year in the price. I think people want to see it above $20 per ounce. Is it just a question of being patient on the silver front?
Yes, I believe so. And what's interesting is the next resistance level, so 1850, give or take, that holds 2150. And then once it breaks 24, 25, 26, that level, maybe it's 27, 28, I believe we will hit new all-time highs in a relatively short order. The 24, 25, $26 level is the breakdown point from 2011. That's where it held for a while before it broke down and bottomed in, I think, late 2015 or thereabouts. Yeah, so if you have patience, I think you'll be handsomely rewarded. And it's a lot cheaper than gold. Gold's primarily to retain your purchasing power. Silver will, you'll appreciate, you'll make money, you'll create wealth or create your own wealth. And, you want to be in silver equities as well, because as we saw, even in 2016, when silver equities were higher, they are so leveraged to the price of silver. So, once we get to even $24 silver, the silver equities will be significantly higher, especially high quality junior exploration companies.
Right. So one more question on the silver price. You're mentioning an all-time high in a relatively short period of time. Can you quantify relatively short, just so we know what we're looking at?
Okay, so once it breaks, say it gets 27, 28, I think it would happen within the following 6 to 9 months, or at least be testing the $50 level. Mm-hmm. And once we get through that, the most bullish thing for a commodity is a new all-time high. I think we see 60, 65 pretty quickly, maybe followed by a correction. But, the real challenge will be probably the next year, breaking through that $25, $26 level, first tackling, 2150. Hopefully we can get to 21, 22 by year end. And there's always, other things to consider, like if we get another margin-induced sell-off and everything, we could see gold back down at 1600. So you want to keep your some powder dry, just in case. You might be able to buy gold, silver equities, or metals themselves quite a bit cheaper. As everyone knows, the global financial system is hanging on by a thread. And that was pretty obvious in September 2019, where the repo market was in big trouble. And to prevent just the Fed funds rate from going to 6, 7, 8%, they had to put in trillions. And that was popped by I think COVID-19 just popped that bubble. I don't think it's really responsible for why gold or silver's higher. It was going to go higher regardless.
Sure. So silver stocks, I want to talk to you a little bit more about that because I think as most investors know, if they start looking at that space, there aren't really very many pure play silver companies. So how do you go about jumping into that?
So yeah, that's a tough one. There's established producers, like you got your big ones like First Majestic, Pan American Silver, and there's some really high quality development companies like Mag Silver, Silvercrest, and a lot of exploration companies, because now that juniors can get financing, I mean, I think we saw something like 20 financings this week. Um, there's a lot more exploration is going to take place and has been taking place. I mean, not to the degree it will, but, and we've seen a lot of very nice drill results on primary silver mines. But I mean, along with that, you have to accept that if you want to invest in silver, it's going to be likely a gold silver producer. Because a lot of companies reverted to that during the lean years because they couldn't make money with silver. And frankly, most of them are just, the average one is about breaking even right now.
Mhm.
So.
Okay, and for silver, I guess as well as for gold, right now, should you be looking at juniors which might have more upside potential, or should you be trying to split your portfolio between juniors, mid-tiers, producers in some way that works for you?
I always advocate splitting. Okay, royalty companies like Wheaton Precious, you get some good silver exposure. It's a lot less risk because of the business model. But junior stocks, unless you really understand that part of the market, are obviously very risky. The good thing is that we're in a bull market, so even bad names will go up a lot. So it's in a way less risky, especially the higher cost producers, which we'll see start to really move past $20, $22 silver. So I would advocate having some producers, high quality development companies, and smaller allocations. I mean, depending on your risk tolerance, to junior exploration companies.
Okay, and interesting you mentioned the royalty companies. I think those are often recommended to people as a place to maybe start. We are seeing more and more of those come into the market. I wonder if you could share any ideas on how to maybe differentiate those ones as they start to increase in number.
Yeah, so when the royalty and streaming model, let's say streaming model, was first pioneered by Wheaton Precious, they were able to get deals with 20, 25% internal rates of return on gold and silver. Then Frankel implemented the model, Royal Gold did, and the rates of return got, because there was more competition, they got bid down, and now they're 5, 7, 9% if you're lucky. And there's 5 companies, 5 royalty companies that basically control all deals, or do all deals that are above 40, 50 million. So the small ones, it's a good strategy. Bigger isn't always better for returns, but it's getting harder and harder because they didn't start out when the gold price was much lower. So their capital doesn't go as far. But I mean, they're still good. They're a little bit riskier, obviously. They don't have the geographic diversification. They have more operational risk and things like that, but they also can go up a lot more. So again, if you're going to invest in royalty companies, maybe have 1 or 2 of a big 5, and maybe 1 or 2 of the smaller companies that ideally are cash flowing a little bit to at least break even, and that have good people running the company because they can find deals where others can't.
Okay. So you do a lot of work, I think, tracking what gold and silver companies are doing. This year, of course, the coronavirus has been a major force. We've been talking about that. You were mentioning companies doing some drilling, they're raising money. Would you say companies have more or less kind of gotten beyond the effects of when there were mine shutdowns, people were slowing down their work? Is that pretty much over at this point?
Yeah, so Q2 numbers are starting to come out, and they're not as bad as I was expecting. Some of them are, like if you had operations in Mexico, which that was 2 full months plus a ramp up period. Those are hit a lot harder. Some volunteered without a mandate to suspend operations, and those got hit really hard. But for the most part, like I saw when Kirkland Lake put out their Q2 preliminary production, I think it was yesterday or the day before, it shot way up because it was much higher than the market was anticipating, even though two of their mines they saw greatly reduced operations. So I think, yeah, some of those are going to get hit short term, but everything looks back to normal now, unless we get another wave of shutdowns, which is always a worry. That's why, for a producer, ideally you want to have, a larger producer, you want to have it operating in a couple different countries, make sure they have enough liquidity to stand, I don't know, 2 full quarters of having to shut down operations. But I'm a little more optimistic that the mining sector will be okay, even if other things are shut down. So, we'll see.
Okay. I would also be interested to hear your take on any other trends you've noticed among the gold and silver companies this year, because really the coronavirus has overshadowed maybe things that are happening people may not be noticing.
Yeah, so last year, M&A has been a big theme for the last 2 years. Last year was the announced and completed deals, I think, was around 20 billion, excluding Barrick. But I think, and that started up before COVID again. There was a lot of M&A going on, but now because companies can't do proper due diligence, I think that's been deferred maybe 3, 4, 5 months, depending on where an asset might be. So, I expect that to come back maybe late Q3, Q4, and into 2021. As you know, it's harder and harder to find large quality deposits, especially that are high grade. So I expect there to be a lot of consolidation. Plus, senior producers and a lot of large mid-tier producers are going to have to acquire just to maintain steady levels of production, not to grow. So I think that is a big theme. And another one is, now that the gold price is higher, if gold companies that are valued based on the metal in the ground are starting to get really move, and that should continue, especially as we push towards 2,000 an ounce and higher.
Okay, so those are two great ones to watch. I think as we finish up, for investors right now, a key question is how to generate the best returns. So any final words for people in the sector who are trying to, I guess, understand where we're at in the cycle right now and what they should do moving forward?
So this is, just my view. Like royalty companies, I'm a big fan of them. They won't have the returns mid-tier companies, junior producers, development, and exploration companies will have. Neither will the senior producers. But if you don't invest in them, you are taking on added risk. And if you want to generate the highest returns, it's best to be more highly concentrated into a name that will do well. But again, more risk. So it's give and take. If you want to generate the highest return, you got to take a lot more risk. But on the other hand, if you spread your portfolio out, you'll generate solid returns. You should beat all the ETFs and indices, as long as you have, subscribe to a decent newsletter and get ideas. Just invest in quality companies that are undervalued, trading at or below net asset value, low cash flow multiples, things like that. But if you put your money in companies with the right management teams, they'll do right by you. Like Ross Beatty and people like that. They always do well for their shareholders.
Sure. So it sounds like right now, almost the most important thing is to be in the market and be ready.
Yeah, if you're not invested, get invested, at least to some degree, so you don't miss out. And hopefully there'll be opportunities to lower your cost basis. And if not, at least you already have some invested.
Okay. Well, thank you so much. I think we can leave it there. It was great to speak with you. Thanks for taking the time.
Thank you.
Thanks. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Chris Marchese with GoldSeek.